through collaborative cryptography and a decentralized network of computational algorithms. It will make sending money as easy and cost-free as sending a photograph. My third observation is that by acting now, we can harness this wave of innovation for greater financial inclusion, capital and operational efficiency, and economic growth for generations to come. The Digital Dollar Project is a not-for-profit effort to encourage public discussion on the potential advantages of a U.S. central bank digital currency, or CBDC as it is known. The project's recent white paper proposes a new additional form of money, a tokenized digital bearer instrument. It would have the same legal status as the dollars in one's purse, but on a mobile device, and would operate alongside existing forms of money distributed through the existing two-tiered banking system and potentially be recorded on distributed ledger technology. This type of CBDC would increase financial inclusion by broadening access to services through digital wallets on smartphones. It would enable the sending of COVID relief immediately to underbanked populations and expand their ability to access financial services. If this type of digital dollar is about more than financial inclusion, it is about basic financial architecture. Today, most of the world's tradable commodities, benchmarks, and contracts are priced in US dollars. Tomorrow, they will be digitized, tokenized, and coupled with smart contracts. They're unlikely to be still priced and accounted for in US dollars if the dollar remains an exclusively analog instrument. We must future-proof the dollar today for a digital tomorrow. Doing so is in the national interest. It will spark creative new industries, jobs, and economic growth. Yet it is undoubtedly an enormous undertaking. It must be done carefully, thoughtfully, and deliberately. Something that is worthy of the dollar's global importance cannot be rushed. It will take time to get right. But now is the time to get started. The recent launch of SpaceX reminds us that America explored outer space and the lunar surface through a series of pilot programs known as Mercury, Gemini, and Apollo. So too should the U.S. explore a digital dollar in a series of well-conceived pilot programs. A team of fine researchers at the Federal Reserve are already thinking about a U.S. CBDC. The next step should be a series of pilot programs driven by the Federal Reserve and the Treasury that draw upon the innovativeness of the private sector to test various designs, technologies, and protocols. Throughout modern history, the U.S. has been a leader in innovation, whether launching the space program or building the internet. It incorporated America's core values of the rule of law, individual liberty, free enterprise, and the right to privacy. The world is asking what role America will play in the future of money. The choice is either we take a leadership role or we accept that others will lead and that their values will be enshrined in this new technology. I say we choose to lead. And if we do, we will increase financial inclusion, enhance democratic values, and future-proof the dollar for generations to come. Thank you.
Thank you, Mr. Giancarlo. Mr. Cascarilla.
Thank you. Chairman Crapo, Ranking Member Brown, and committee members, thank you for the opportunity to appear before you today. I'm Charles Cascarilla, the CEO and co-founder of Paxos. I've spent my career in financial services as an analyst, investor, and entrepreneur, and experienced the shortcomings and systemic risks of our financial market infrastructure. I started Paxos to modernize this infrastructure and create a new, open financial system for everyone, built for the 24/7 digital age where money and assets can be transferred instantly, efficiently, and fairly. In 2015, we became the first trust company approved by the New York Department of Financial Services to manage crypto and blockchain assets, meeting the same standards as banks and other financial institutions. We believe stablecoins and a CBDC are imperative to our financial infrastructure and maintaining our leading economic position. Today, I'll discuss the problems we're solving, how our stablecoins are designed, and how CBDCs should be approached. Stablecoins address the antiquated plumbing of our financial system, updated for today's world, where commerce happens in real time. We can no longer rely on a system that's available for a few hours, 5 days a week, with long delays. We see three urgent areas for pursuing a digital dollar. First, financial inclusion. Stablecoins can provide equal access to financial services. Currently, money creates an unnatural digital divide. Physical cash is accessible to everyone, but electronic payments are limited to those with bank accounts. There are 63 million unbanked and underbanked American adults. Why reinforce disadvantage when we can support full participation in the digital economy? Blockchain-based stablecoins allow everyone access, just like physical cash, so people can avoid high account and overdraft fees, check cashing, and cross-border remittance fees. Second, capital mobilization and cost reduction. Stablecoins bring cost savings and speed to everyone, from the biggest financial institutions to the smallest consumers. Time between trade and payment ties up trillions of dollars of capital. This contributes to the financial services industry now consuming roughly 8% of current GDP, compared to 4% historically. Blockchain allows dramatic efficiencies and unlocking of capital for more productive uses. Thirdly, technology-enabled transparency and competition. Digitizing dollars reduces the gap between consumers and the Federal Reserve, enabling transparency, real-time risk monitoring, and reductions in systemic risk from centralized intermediaries. As a result, improved competition benefits customers by driving innovation in financial products. Now I'll share how Paxos designed 3 of the top 6 stablecoins in the world. First, on technology. Blockchain is just a database. Whereas other databases are updated by one central administrator, blockchain allows for a shared, verifiable, more secure, and distributed ledger. Anyone with a smartphone or the internet can access our stablecoins. Transactions are peer-to-peer, instant, 24/7, and cost just a few cents. Second, on regulation. Uniquely, both Paxos Trust Company and our stablecoins are regulated. Our stablecoin reserves are fully segregated and fully backed by treasury bills and equivalents, minimizing risk. Third-party auditors publicly review our reserves monthly. Importantly, our stablecoins are not competitive to the dollar. They simply represent dollars already in circulation. Lastly, privacy and accountability. Our stablecoins are anonymous, like cash, but transactions are publicly viewable. This allows individuals to transact freely and privately while maintaining verifiable audit trails. All customers go through a full AML KYC analysis at both the on-ramp and off-ramp. So how can we move forward? A central bank digital currency is a fiat stablecoin issued by the central bank or treasury. A dollar with stablecoin characteristics is a powerful mechanism to drive innovation in the financial system. It's important for this committee to deliberate over the impacts of key design decisions regarding privacy and anonymity, such as how much of the details of private transactions are disclosed and to whom. Likewise, there are questions about the level of openness and access. Should only banks have the ability to interact with the Fed to distribute a stablecoin, or could other institutions, payment companies, or even consumers? Consumers and businesses be able to make peer-to-peer transactions like they can with physical cash? Reaffirming the values of free markets, private property, privacy, and freedom of speech are instrumental in growing the American economy. A well-constructed U.S. CBDC will support our preeminent economic position and the dollar's reserve currency status. Ultimately, the best mechanism to answer these design questions is safe experimentation. The right regulatory policy would be analogous to what we did with the internet, enable innovators to experiment and iterate with different implementations within a flexible regulatory framework. At Paxos, we are modernizing the financial system so all Americans have equal access. A CBDC would upgrade our financial infrastructure, increase inclusion, and reinforce our values in the position of the dollar. Thank you.
Thank you, Mr. Cascarilla. Ms. Cuttino.
Hello there. Can you hear me?
Yes.
Chairman Crapo, Ranking Member Brown, members of the committee, thank you for this opportunity to testify on this vital topic. I'm a visiting assistant professor of law at Duke University, where my research focus includes consumer finance, and I teach a course on fintech and financial inclusion. In the wake of federal efforts to quickly deliver benefits under the CARES Act, millions of cash-strapped Americans suffered weeks-long delivery delays for paper checks and or saw the value of those benefits depleted by check cashing fees, overdraft charges, and short-term loan costs incurred while waiting for payment. Yet these stories are not unique to the pandemic. They arise in part from frictions in the payment system resulting from access barriers to banks and timely delays in payment processing that often drive demand for costly fringe services like check cashing, payday loans, and high-rate prepaid debit cards that deplete already limited resources to the tune of $90 billion in fees annually. Calls for open access to the payment system often point to the risk associated with this long-standing fringe marketplace, which risks include financial distress and insolvency. However, in my remarks today, I will point to a novel fintech service to caution that these risks are likely to persist even in a digital economy and the absence of open access to real-time payments. Despite claims of financial inclusion, some fintech firms serve low to moderate income consumers, perpetuate or exacerbate the risk these consumers already face. Take, for example, early wage access programs. These programs are mobile and internet apps that allow workers to withdraw earned but unpaid wages before scheduled paydays. Providers claim these programs are efforts to facilitate real-time payments of wages, like an ATM for your paycheck. Offered through mobile app stores or as an employee benefit, these programs collect payroll data to calculate accrued wages and then provide early wage transfers, which are automatically reimbursed on the user's next payday. In the wake of COVID-19, these programs experienced increased demand to cover basic living expenses and to supply stock-ups for stay-at-home orders. And they anticipate further demand spikes once Americans are fully back to work. Early wage programs promise to resolve the familiar time friction in payments and replace high-cost credit like payday loans. However, this idiosyncratic market includes programs that pose unmitigated risk reminiscent of payday loans under the guise of real-time payments. In the interest of time, I will focus on the most disconcerting programs. Despite their novel form, these programs function much like payday loans by first offering funds to be repaid at a later date, a dynamic that often leads consumers to miscalculate future costs and repayment risk, and second, by having fees, limited underwriting, and repayment terms akin to payday loans. For example, these programs can have per transfer fees or even encourage tips that can be the equivalent of 470% APR, which is higher than some payday loan costs, though these are not disclosed in such manner. And after repayment in full on payday, these programs can result in payday wages that are reduced by 25 to 50%, which makes managing other expenses difficult. Arguably, as in the payday loan context, these characteristics can lead consumers to repeated use of the product in a manner that severely depletes their already limited resources with compounding program fees, overdraft charges, and late fees. Yet, as purported payment services rather than loan services, early wage programs enjoy limited restrictions and disclosure requirements, otherwise intended for consumer protection. Thus, the opaque risks and costs for certain programs are fully borne by consumers who lack full information. Consequently, pending state class action lawsuits, online consumer reports, and investigative reports reveal a growing number of consumers who spiraled into more precarious financial conditions, unaware that these payment services function much like loans. Undoubtedly, the emerging early wage access market deserves distinct regulatory attention. Nonetheless, it illustrates that in the absence of public policy addressing open access payments and real-time payments, low-income and moderate-income Americans will continue to have their limited resources exceeded, whether by traditional fringe services like payday loans and check cashers, or by novel fringe tech services like some early wage access programs. The Federal Reserve Board governor has said that everyone deserves the same ability to make and receive payments immediately and securely. For everyone to have that same ability, however, we must bypass the high price of banks and provide public access points that have minimal transaction costs for Americans with limited resources. And we must do so urgently, particularly in this moment when financial distress is acute. Because the payments infrastructure is already ubiquitous, public access to it may be the quickest way to achieve financial inclusion to address pressing economic concerns. Open access, particularly with real-time payments, could redistribute billions in wealth to, and in turn facilitate savings for a cash-strapped America. Please consider those policy proposals that offer thinking opportunities for all. Thank you.
Thank you, Ms. Cuttino. I'll start the questioning, and boy, there's a lot of issues I want to try to cover. I won't get it all done in my questioning. Issues like privacy and data protection, transparency and access, and frankly, the impact of our actions and how we proceed in the United States on the US dollar. Let me start with you, Mr. Giancarlo. Are other central banks in the world developing CBDCs?
Yes, indeed, at a really remarkably fast rate. The Bank for International Settlements did a survey, I think it was in 2018, that identified the majority of central banks around the world are looking into CBDC, and some of them are quite advanced. Sweden, for example, its Riksbank, its state central bank, is embarking upon a cashless program using a central bank digital currency, but most of the world's major central banks have advanced efforts in looking into this.
And this question is for any of you, but please answer quickly because I got a lot of questions. But is the fact that other central banks are developing CBDCs. And let's take, for example, the People's Bank of China. It's one of those that is very far down the road, I understand. Is that a threat to the dominance of the US dollar in global currency? Anybody got an opinion on that?
I'll jump in, Senator. The dollar's strength in international world as a reserve currency is built on many pillars, and many of those pillars are quite durable and are not going to be undermined anytime soon. Nevertheless, the Chinese efforts and some other efforts are directly targeting some of those pillars. The U.S. dollar's dominance is based upon an accounts-based global banking system. The move toward a digital yuan by China is meant to bypass the accounts-based system and allow for direct payments. Coupled with their Belt and Road Initiative and a now a free trade zone in the East that they are talking about, that is going to have an impact on a number of dollars' strengths in the global market. And then finally, there's the issue that most of the world's major commodities are priced in dollars, major commodities, contracts, and benchmarks. And as they all themselves move to a digital programmable format, I believe it's vitally important that the dollar also itself become programmable and digital in order to interact with those commodities. Otherwise, other countries' digital money will be able to interact with them. But I'll leave time for others to pipe in.
Well, thank you. I want to move on, but I would like to ask Mr. Cascarilla and Ms. Cuttino, if you have an opinion on that, please in writing respond to me on that after the hearing, because I'm very interested in that issue. Mr. Cascarilla, I wanted to move to another issue just because of the time pressure here, and that's privacy and data protection. Can the digital currency models, the blockchain-based models that you discussed, adequately protect, in fact, can they better protect privacy and data as we move forward in transactions?
Yes, I think that's exactly what a blockchain-based system enables. And the reason that's possible is because you are allowing access to the blockchain for anybody who has internet access. And at the same time, that blockchain has privacy-enhancing features that allows transactions to happen basically anonymously, very similar to cash. However, importantly, all transactions are stored on the blockchain. So law enforcement and regulators can follow transaction trails and have a verifiable audit mechanism if ever they need to explore what transactions have happened on the chain. And so in the case of Paxos, we're regulated. We have a banking regulator. They come in, they understand our books and records, our policies and procedures, and they can actually look at everything that's happening. And so we create transparency at the same time you create privacy.
All right, thank you. And again, I'll move on quickly. I really would like all of you to respond after the hearing on all of these that you didn't get to answer. But Ms. Cuttino, you talked about the fact that there were some transparency and some access issues and some abuse of some of these models. And let me just start out. It's my understanding that the utilization of digital currency models based on blockchain can actually reduce the transactional costs of financial transactions if done properly and fairly. Is that correct?
I believe they can if done properly and fairly and enforced to do so. Yes.
And I think that's the case. In fact, I think that's one of the benefits. Just quickly, Mr. Giancarlo, is that correct?
Yes, and we do have some evidence of that in countries actually in Africa, in Kenya with their M-Pesa system, and in Nigeria with their cashless. We are seeing greater elements of financial inclusion as they move to electronic. In a society that's very young and uses a lot of mobile devices, there has been improvements in financial inclusion as they move to a cashless mobile device-based system.
All right, thank you. As you can see by the clock, I'm over my time. I wanted to get back to you, Ms. Cuttino, but I will send you some questions that you can respond to after the hearing. Senator Brown.
Thank you, Mr. Chairman. Mr. Giancarlo, nice to see you again. Professor Cuttino and I, welcome to the Banking Housing Committee, one of the best places to be in the Senate. So you've researched, Professor Cuttino, you've researched a lot of fintech products that don't really live up to their promises. As we talk today about digital cash and access to the payment system, I'd like you to discuss innovations in terms of what it means for the unbanked and underbanked workers. I noticed in your response to the chairman, you said if forced to do so. That was the last part of your statement, and I know you never get enough time in these hearings, but talk about that. I think you and I share the same interest in making sure the banked and unbanked and underbanked are served much better in this country. So what kind of features do we need to make sure any innovations work that way?
Yeah, sure. Well, I think as an initial matter, first as an initial matter, thank you for having me here first time. But to answer the question, we need to address the frictions that exist with the payment system now and understanding what those are and resolving those. So first we have access frictions. Those relate to cost, they relate to geographic restrictions, they relate to certain trust dynamics. And so if we're addressing those with fintech solutions, we have to appreciate that the transaction cost must be nominal for low to moderate income consumers. There must be a way to bridge the gap from cash to the digital divide, and that 25 million people are without internet access, 45 million people are without smartphones. And so there needs to be an appreciation that if we're going to advance financial inclusion, there are some people who are left out of the technological space that we're currently in. And so to loop them in, sort of whatever the innovation is, has to contemplate that to bridge that gap. And I'll leave that there, but just noting that, of course, with innovation, there comes reduced cost, and having the range of providers advance financial inclusion or having a regulator ensure that it's not just them doing it, all of them are doing that, and that some consumers aren't exposed to the worst side of the industry is really what I often see and I'm trying to mitigate.
Okay, talk further through that. Your research of some fintech products, you call them fringe tech, which is a pretty apt description. How does the Banking for All Act provide some of the benefits that these fringe tech products that we're asking about, these fringe tech products offer without the downsides?
Yeah, so on that, I would say that some of these products, like for example, if we're talking about early wage access programs, the idea that it's allowing you to quicker access to your income. Thinking the act would allow for consumers to have faster access to their income instead of waiting for paper checks. It would also allow for them to have more secure storage for their funds in comparison to payment apps like Venmo, where really they store funds like a bank, but they don't have the protection, say like bank deposit insurance. And so in that case, they're really unsecured liabilities that you have against, or unsecured claims you have against Venmo, which means that if it goes bankrupt, you're likely to recover pennies on a dollar for which you stored there. In contrast, having an account, having under the Act, it would protect consumer funds. It would also promote wealth in the sense of even nominal interest that can be accruing on the accounts there, and incentivize saving and keep costs low for transfers.
So some of the fintech, Bitcoin and other cryptocurrencies have told this committee over the years that people who don't trust the banking system, people, some of whom you're talking about, they would flock to Bitcoin and other cryptocurrencies. Why, apparently that's not happened. Why have they not seen the widespread and mainstream adoption among the underbanked and the unbanked?
Right. So when it comes to trust, it's really hard to dissect just what it is that particularly low and moderate income consumers are having issues there. But a lot of them note that it's cost-based. They have had past experience with things, hidden fees, overdraft charges. These relate to transaction costs with the banking system. And so any solution should have, again, low transaction costs. In the early years of Bitcoin and some of these other cryptocurrencies, the transaction cost for this consumer group was extremely high and remains particularly high. And so that's one barrier when it comes to some of these blockchain and cryptocurrency technologies. You also have the reality that they're pretty impractical. for these consumers who, again, transact in their local community. Their small businesses will not be transacting in Bitcoin and other cryptocurrencies in that manner. And so interoperability, again, the fact that many consumers are not in this group, are not operating in e-commerce in the same way or with the same savvy that is required for Bitcoin and certain cryptocurrency uses. That's why I think, in part, they weren't talking to it. But I'd also note that, I mean, there was a lot of instability with those coins. There's a lot of uncertainty. And so there's distrust that was likely happening with that market as it is emerging as well.
Thank you, Professor. Thanks, Mr. Chairman.
Thank you, Senator Rounds.
Thank you, Mr. Chairman. Look, first of all, thanks for having this hearing today. I think this is an important subject, and I think the sooner that we explore it and begin the process, the better off we're going to be. I just think about what I've seen recently within airports as we move back and forth, and the number of individuals that are making very small transactions on credit cards for just virtually everything.
I don't think so.
And I wondered whether or not it was of value, and whether or not the merchandisers that are out there that are receiving credit card requests for making very small purchases, whether the costs involved in that are going to cover, the costs that they're going to actually pay out. And in considering that and in looking at these other programs, the CBDC seems to bring up at least another alternative. What I'd really like to ask is a question of all three of our guests today. And I'll just start with Mr. Giancarlo and move our way down the line. Who are the winners and who are the losers within the financial industry, the fintech companies? If we were to move to and begin a pilot project as you suggested, who would be the first ones on board and the first ones to be looking at this saying, there are some real negative things here. Where do the dollars move? And I think if you follow the money, you start to understand really where the folks would be in opposition to it, and also the folks who might very well be in favor of moving in the direction of CBDC payments. And Mr. Giancarlo, can you talk a little bit about that?
Yes, Senator. The way I view a U.S. central bank digital currency as it is as core architecture, financial architecture for the financial system, it would be, in a sense, an alternative to the existing architecture, which is the accounts-based architecture, which, despite many efforts to modernize, still inherently remains slow, expensive, and rather exclusionary. And what we're talking about with the CBDC is a new architecture on which businesses are built, on which innovation takes place, on which an economy can flourish, and an architecture that addresses the slowness, addresses the expensiveness, and addresses, to some degree, the inclusion issue. It doesn't address every issue, but addresses it. And so, to answer your question, the winners and losers, I think, will be those who can use this new technology to increase speed, to lower cost, and to address issues of inclusion. And I think the losers will be those whose business model doesn't evolve, who's wedded to that slowness, that's wedded to that expensiveness, or wedded to that exclusionary nature of the current system. The opportunity, I think, is a social benefit, a national benefit, but there will be winners and losers, as there are in any transition from technology. And I'll just end on this one point. We mistakenly think that Darwin said the strongest survive. The fact of the matter is, Darwin said the most adaptable survive. And I think that's true whenever we transition to a new architecture, to adapt to it. I think will help bring benefits to society at large.
Thank you, Mr. Cascarilla.
Yes, I mean, I think it's important to realize that technology ultimately is a tool. And so it's how you use the tool that will ultimately decide whether you get certain types of benefits or certain types of costs. And if you think about the incumbents in the current system, they have the customers. And so if they're able to adapt, they're able to use this new technology, they would be able to offer, I think, better products, more competitive products, and be able to embrace this innovation. On the other hand, of course, if you don't embrace it, and this technology is as transformative as I certainly believe, as I think we are all talking about here today, then you would certainly be disintermediated. You could potentially lose. And so I think what happens is technology is something that accelerates the process of creating a new type of financial system, one that's more resilient, one that's more fair, one that's more inclusive, and one that offers a lower cost base so that many more types of participants can use it in an efficient and fair way. And so
Thank you.
that's the important concept here.
Thank you. Professor Cuttino.
Yeah, so on that, I think the winners and losers, and not to be a professor, but it depends, because I think regulation could be key in ensuring that there are minimal losers in terms of that focus on financial inclusion with some conservatives. By that I mean, I've recently read an article that said once we shift to real-time payments, of course, the cost will go down. And banks were searching for other ways to recoup their overdraft fees and interchange fees that they admit they would be losing. And so trying to shift to whether or not they're increasing costs for accounts or something else. My point is that once the industry is losing fees, they'll seek to recoup it in another manner. How do we protect the most vulnerable consumers against that shift that inevitably continues to leave them out?
Thank you. Thank you, Mr. Chairman. My time has expired.
Thank you. Senator Tester.
Yeah, thank you, Chairman Crapo and Ranking Member Brown, for having this hearing. I think we should really do more and more of this, because I don't know that anybody on this committee, and I should speak for myself, I will tell you, I need more information. We're going to figure out how we're going to handle this. So I always apply things to where I live. Where I live, this little gizmo doesn't work too good, okay? And quite frankly, internet's probably a little slower than it should be. So I'll start with you, Professor. Are the folks that don't have good internet, are they just left out? Is that the deal? I mean, give me your perspective.
Yeah, I mean, I think they could be left out if we do not make strides to ensure they are included. And
So-
something like, sorry, go for it.
That's good. That's Mr. Either one of the two of you want to speak to that issue, because you must have a plan. What is your plan?
Thank you, Senator. I might speak to it because I had the pleasure of visiting your state during my time as chairman, and actually met with a number of your ag producers that are outside the urban areas and actually struggle with broadband access. It's a major issue as we move forward, and it goes beyond payments. It goes to their inclusion in so much of the knowledge economy and other areas. It's a real concern. I don't think it's one, though, that we can address by looking at digital payments. I think it's one we need to address as a nation and recognize that we need to make sure that all our citizens, whether they're in rural areas or inner city areas or elsewhere, are included in the digital economy with broadband access. And certainly anything we can do in that area is worthy of support.
I couldn't agree with you more, but until that happens, we're pretty much hosts, is what you're saying.
Well,
It's okay. I've got to move on, but that's what I heard. Charles?
I think what we're talking about here is a way to create a transition to a different type of financial system. It's not one that will replace cash or access for those who don't have readily available.
But you are talking about making deals, and there's businesses that are going to use this to be able to do transactions quicker. You all said it in your testimony. To be able to make transactions quicker, more efficiently, more cost effectively. That's the advantage here. If you don't have internet, what's the solution? Or is there one? Until you do, like Mr. Giancarlo said, make the investment in broadband that has to be made eventually. Is that?
I would also add to that, Senator, we had the same problem with regional banking and country banking as well. I think 4 out of 5 small banks have closed in the last few years.
Yeah, but
rural areas are.
But also, let me point out, in the CARES Act, the people who did the best job were those small banks. It actually worked better for rural America than the big boys. But Mr.
As did minority banks as well.
I got to have Mr. Cascarilla, since he's in this business, tell me how we deal with areas that don't have good internet. Because, by the way, this isn't a small part of the country. I mean, it may be flyover parts and it may be rural, but there's still businesses there that are going to need this and that are going to get, if this works as you guys have said in your statement, they're going to get out competed by the businesses that have the broadband.
I think your point is very good, which is that you need to be able to create much more broad-based access to the internet, similar to how we have interstate highways and roads.
Crapo and I will make sure we get that money in the rural America, right, Mike? So let me ask you this. When it comes to laundering money, now let's put it this way. Let's come to area like my credit card. Occasionally somebody gets that number and buys a hoverboard in Ohio. Believe it or not, that actually happens. They call me up, you in Ohio, it's taken care of. I never see the problem. The bank, the credit card company and the bank fix the bank fixes. The question is, how is it fixed here?
Well, there's a couple components. The first is we're operating under New York banking law. We're a trust company. We onboard the customers, and we're able to help them.
What you're saying is you have the same regulation as the banks do right now?
That's exactly right. We do. We're recognized under New York banking law. We're a trust company. In fact, we're safer than a bank. We hold all of our client assets fully bankruptcy remote and segregated. We
Who's
never
your regulator?
client assets.
Who is your regulator?
The New York Department of Financial Services.
Okay, so what happens in Montana if I get ripped off? Does New York have any obligation to take care of my problem?
Yes, they're the primary regulator for us. So we have reciprocity across states, and so they're our primary regulator when we have to deal with situations.
Don't you have to have a national law to take care of this?
Well, I think national law can
supersede
national law has pluses and minuses to it. I think national law has pluses and minuses. What's really important is being able to create portability across state lines. Even as a trust company organized under banking law, we don't have explicit reciprocity from every single state.
Mr. Chairman, appreciate the hearing. I think we need to do more of this. Thank you very much.
Thank you. Senator Cotton.
Thank you, Mr. Chairman, for this very important hearing on a vital topic. The U.S. needs a digital dollar, but not exactly for the same reason that most other countries are embracing digital currencies. We don't see it so much as used within our borders or to help reach people who struggle to get to banks or even have traditional currencies. This is more about keeping the dollar's reserve currency status and ensuring its role in global payments. The U.S. dollar has to keep earning that place in the global payment system. It has to be better than Bitcoin or any other kind of cryptocurrency. It has to be better than a digital one. The dollar has unmatched advantages, but without digitization, I worry that the dollar may end up being like the very best flip phone in 2006, or the very best movie rental store in 2005, or the very best horse-drawn carriage in the 19-teens. So, Mr. Giancarlo, I want to offer you just a chance to give one example here. If we already had a digital dollar, how differently would things look earlier this year when the Treasury took several weeks to send out millions of dollars of individual relief payments under the CARES Act, including over 80 million via an old-fashioned paper check?
Thank you. Well, it would have been able to be instantaneous delivery of those funds to those with smartphones. Now, as Professor Cuttino and others have noted, we don't have universal distribution of smartphones, but we have actually fairly good penetration of smartphones into certain communities. That is an issue that is in itself is worthy of further analysis, but at least the technology would be there for instantaneous distribution of funds in a crisis. We have many communities that rely on paper checks, military families, for example, for their salary, and veterans for their benefits are also wait sometimes weeks for receipt of that, or they have difficulty getting that money to their family members. This would allow for immediate distribution of those as well.
Thank you. And Mr. Giancarlo, while we're with you, I just want to highlight a part of your testimony. You say that the world's most tradable commodities, contracts, significant items of value are today priced and accounted for in US dollars. You also say that tomorrow they will be rendered in digitized tradable tokens and coupled with algorithmically driven smart contracts. You also say that we must ask ourselves whether the digital commodities and contracts of the future will still be priced and accounted for in US dollars if the dollar remains exclusively analog and does not itself become digitized and programmable. Could you please elaborate further why that is the case?
Yes, thank you. And this comes directly from my experience as chairman of the CFTC. The United States, one of the underpinnings of the dollar, one that's perhaps not as well noted as others, is the fact that most of the world's major commodities are priced in dollars. Wheat, soybeans, cotton, as well as energy, oil, natural gas. precious metals, industrial metals, and some of the world's major benchmarks and contracts. The world needs to reserve dollars because they need to buy those instruments using dollars. Those instruments, though, are moving themselves to digital format. We saw it in soybeans moving to blockchain technology for its global logistics. We're seeing the world's major commodities benchmarks move to a digital format with programmability built in. This will be happening in the next few years. If the dollar remains analog, but most of the world's key commodities and contracts become digital and programmable, others will take advantage of that. That's one of the reasons why our economic competitors are themselves developing digital currencies to price the world's major commodities and contracts in a digital programmable nature. You know, currencies compete against each other. Throughout most of human history, they've competed. The era of the dollar's dominance is relatively rare in human history. And having technological innovation in a currency is going to be one of the reasons that the world is going to select one currency over another. We want to make sure they select the dollar.
Yeah, speaking of competition, China just announced plans to create an East Asia cross-border payment network using a cryptocurrency based on a basket of four currencies: China's own yuan, the Japanese yen, the South Korean won, and the Hong Kong dollar. What's the significance of that for the United States?
Will allow them to make direct payments in this new currency without having to go through foreign exchange markets, many of which are based in the United States, to convert currency using dollars as a settlement mechanism. So it will extend the RMB's global importance and its entrance into the world of reserve currencies.
Thank you. And thank you all for your appearance today. Thank you, Mr. Chairman. My time has expired.
Thank you. Senator Warner.
Thank you, Mr. Chairman, and appreciate very much this hearing. And I think I'm a proponent of both access to capital and innovation. I think central bank digital currency really offers some exciting opportunities. I think, though, based upon today's hearing and our testimony, that we still got a long way to kind of get this balance right between the impact of a CBDC on monetary policy, privacy, and financial stability. Mr. Giancarlo, I want to start with you. I think many folks sometimes mix together too much anonymity with privacy, and I think they are distinct. We all know that information can be private but not anonymous, such as transaction logs, the personally identifiable information safeguarded by a bank. Likewise, information could be anonymous, but not private, such as the sharing or disclosure of spending patterns aggregated across large numbers of users. Giancarlo, how is this a meaningful distinction, this difference between privacy and anonymity, and how we think about those two concepts as we think about CBDCs?
Thank you for the question. It's a great question. In an analog environment, it's very easy to have the notion of privacy and anonymity be complicated together. As we go into a digital CBDC technology, it's possible to make programming choices based upon policy developed in the public sector, and then integrate that into the technology. What the digital environment gives us is the ability to make those choices and program it into money itself. So we could have an environment where all transactions are recorded on a ledger, but only those who are, say, indicated by sort of big data analysis for perhaps a likelihood for criminal activity would then have the anonymity removed and identity revealed. And so that's why it's so important that we begin the experimentation now so we can decide what programming choices, what policy decisions to build into this new technology. And no issue is more important than the issue of privacy in the system. We want the system to be used, and therefore we've got to get the issues of privacy and law enforcement, the balance between the two. We've got to get that right at the outset.
The chairman and the ranking member and a group of us in a bipartisan way have been grappling through this on something we call the Illicit Cash Act, on AML and beneficial ownership. As we move into this next realm, we've got to make sure we get this right. Last question for both you, Mr. Giancarlo, and Professor I'm interested in what my friend Sherrod Brown's ideas are about digital retail Fed accounts, and I do think we have to think through that because I don't want to know if we want to turn the Fed banks into retail commercial banks, but I do think we got to think through account holder ID verification, also getting some of this screening for illicit activities. But once again, we kind of butt that up against privacy concerns. How do we get that right balance here? And how close are we to having an effective digital identity tools for the purposes of a program like this? I might start with, down to the last minute, Professor Cuttino and then Mr. Giancarlo.
I mean, candidly, I'm not. You're talking in terms of whether or not blockchain technology has the tools for.
I'm talking about if we're talking about building in potentially, as Senator Brown has said, this new whole system. How do we again get this balance with privacy right versus some of the upsides? I think that Senator Brown has pointed out. We're talking about turning this over, engaging with the Fed. We've got to make sure we would get it right privacy-wise. We'd also want to make sure that as we build the system from the beginning, we don't end up with some of the challenges around things like beneficial ownership or so rapid on our traditional system.
Got it. My answer is going to be brief because I'm going to start with I am not a privacy scholar, and so I will just give some quick thoughts. And that I do think the Fed should at least work with industry to appreciate, understand whether there needs to be firewalls in place, and or having the account with industry that is better equipped for those firewalls. But I will defer to Mr. Giancarlo on the rest of the analysis.
What I would say is in the analog world of fiat currency we have now, we have made policy choices. We've made policy choices that transactions of an amount greater than $10,000 are reported for anti-money laundering and other purposes. So we can and we must make policy choices as we explore a new form of digital currency as to where that balance lies. And I think there's going to be a critical role for Congress and for policymakers in getting that balance right. But what we can't do is allow the need to make important policy choices like that frees us from moving forward when so many of our economic competitors around the world are exploring this and so many private sector actors are exploring this. At the end of the day, all the exploration that's going now is there to address the issue of the expense, the slowness, and the exclusivity of the existing system. And it's time to get in the game, explore that, and bring these important policy concerns up front, right in the development stage as we explore this.
Thank you, Mr. Chairman.
Thank you. Senator Kennedy, are you with us? We have a number of senators who are checked into the hearing, but who have also got multiple hearings going on. And so Senator Kennedy's probably at one of those other hearings.
I'm
coming.
here,
There it is. Okay, Senator Kennedy.
If I get my video working.
We hear your audio. There we go. We got you.
Thank you, Mr. Chairman, and thank you for holding this hearing. And thanks to all the witnesses. I take it from your testimony that none of you are opposed to a digital currency for the U.S. dollar. Is my assumption correct?
Yes, Senator.
That's correct.
I'd like each of you to tell me what Congress needs to do. And why don't we start, Mr. Chairman, with whomever you would direct to go first.
Well, let's go in reverse order this time. Ms. Cuttino.
Sure. Congress, there are a host of considerations that need to be made, but at least in terms of financial inclusion, which is what oftentimes these conversations are centered on. What Congress should do is ensure, again, we bridge the gap between those who have not access to the internet and mobile devices. And
Professor, let me stop you. I understand that. I listened to your testimony earlier. You were very eloquent. Let me rephrase my question. What does Congress need to do for the American people who have a digital currency in dollars within 3 years? And if you want to pass on the answer, I understand.
I'll pass on the answer.
Okay. Who would you like to go next, Mr.
Mr.
Chairman?
Cascarilla.
Yes, I think there's a number of things that can be done to promote this. The first is creating a passportable regulatory framework. So
Okay.
in the EU, there's an e-money license. You have an e-money license in one country, it works anywhere. And having that in the US between states is something that should definitely be possible in a federal union and would make it much easier for innovative companies to begin to help to think about how this could be deployed. The second way, I think, is by creating access to the Federal Reserve from non-payment service providers. This is something the Bank of England has just done in the last year or so.
What is a non-payment source provider?
A non-bank payment provider. It could be any type of fintech firm. It could be payment companies. And what this would allow, wallet companies, this would allow there to be more competition so that you could have the movement of stable coins be distributed by anyone who has access to the Federal Reserve, not just banks. And so creating non-bank payment service provider access would be really important. So I think those are two really important things that Congress could work on. I think being able to fund, and lastly, being able to fund a project here along the lines of what Chris was talking about that would create pilot programs so that there could be more testing and more understanding of how this could be used would be crucial. Because I think that realistically, a CBDC is something that needs to be understood and deliberated on. There's important policy decisions that need to be understood by this committee in Congress around privacy and anonymity.
I get that we need to deliberate. The United States Senate deliberates really well. Let's go to the last witness, Mr. Chairman. Can you tell me, once again, the steps the United States Congress needs to take to have a digital currency in the U.S. dollar within the next 3 years?
Thank you, Senator. By the way, it's nice to see you again. I was before your committee, one of the last testimonies I gave before leaving.
I remember.
Nice to see you again. Thank you very much. So to answer your question, I would recommend that Congress encourage, if not authorize, the Federal Reserve and Treasury to work together on a series of pilot programs in the same way we use pilot programs to land a man on the moon, to explore different elements of this, and that Congress make very explicit in its instructions what areas of concern should be focused on. Issues of privacy, which we just discussed, issues of financial inclusion to be built in right from the outset, issue of cyber resilience, critically important, issues of interoperability with other CBDCs being developed in the world are just some of the areas that Congress, I think, could instruct the Federal Reserve and Treasury to take into account as they roll out a series of pilot programs, which could be done nationally, can be done locally. They could focus on discrete sectors. One area to experiment with might be veterans benefit distribution or military pay for military families. Those are areas that we could do in, say, a Fed regional area where there may be a military base, or perhaps benefits on rural areas and say Indian reservations. We could look at those in discrete areas, do a discrete pilot program, see what we've learned from it. Just as the early space missions were relatively modest. They just tried to launch a satellite into orbit before they went further to land on the moon. I think we should start small, learn what we learn, then take the next step. Drop back, analyze what we've learned, go to the next step. And each of those steps should be reported to Congress with Congress's involvement, because at the end of the day, Congress needs to make sure that public policy is built into this new future of money that our children and our grandchildren are going to be using long after we're gone.
Would you send me a letter saying just what you just said? I would be grateful. Thank you, Mr. Chairman.
I'd be honored.
Thank you, Senator Kennedy. Senator Cortez Masto.
Thank you. Let me just follow up on that line of questioning, because I think that's very interesting, and I thank you all for being part of this panel. So, Mr. Giancarlo, do you think that the Treasury and the Federal Reserve are equipped to take on those pilot projects? Do they have the necessary resources and staffing with the sophistication level to be able to move forward in a manner that really complies with what we are trying to achieve here, which I don't disagree with?
Thank you. So I'll start with my own experience running a federal agency. I know that when we attempted to do larger technological initiatives, we needed to bring in expertise from the private sector. We simply didn't have the salary scale to bring in that level of expertise. We didn't have the teams. We had busy day jobs to do our mission that Congress assigned to us. And to move in there, we started at the CFTC trying to do some work in artificial intelligence to better understand the market data we were receiving. And yet it was very difficult to do with our existing resources. So the answer to your question is, I really believe the right way to do this is the way we did it in the space program, the way we did it in the early days of the internet. And that is the core policy is driven by the official sector, would be driven by the Federal Reserve. But we would bring in the innovativeness of the private sector, the project management skills of the private sector, and the sense of urgency of the private sector to drive this forward. So I believe it should be, in the best American tradition, a public-private partnership with all the core policy issues settled by the official sector, but with a lot of the human power and the intellectual inventiveness of the private sector brought to bear.
Thank you, and I appreciate that. I do think, though, and I love your outline of it, addressing privacy and financial inclusion, but I also think that we already are very familiar with the fact that a portion of our country are unbanked, and we're not doing anything about it. So I don't think that necessarily needs us to be a part of this kind of discussion, but it's something that we already have to bring along, and I cannot stress that enough, because Nevada, in my state, unfortunately, we are the state with most people that, and the highest percentage of underbanked in this country. And I see the impacts of that right now during this crisis and other downturns that we've had. And so let me ask, I think it's Professor Cuttino. Thanks for joining us. So is the solution to providing bank accounts to every American adult solved by giving people a bank account, or providing people access to technology to find other sources if they can't get it with a regulated credit union or bank? And if so, how do we get them to using that new technology? And what do we need to do now to be able to give them those?
Yeah, that's a good question. So giving them access to a bank account, a publicly provided one, would first reduce, potentially eliminate any transaction costs that they have in the private market. That, again, is a barrier for most people who are unbanked. Basically, do not have enough money to maintain a bank account. And so the public bank account option gives them recourse when they don't have enough funds for the private market. So that's one. And so I would say that they do need that at a basic level. Providing them with technology. I mean, I think that would be a next step in sort of technology, meaning the enhanced broadband access. I mean, something more radical would be figuring out how to get everyone a smartphone. But those things are needed before we get to the conversation of saying everyone has equal access to a digitized marketplace. And so the first step is, of course, bank accounts, and probably bridging the gap between cash to the digital economy, which again is like a debit card access. And so if they have bank accounts, they have debit card access, you're allowing them to transact in cash and then transition into the digital market. And once we have that in place, and then build up the infrastructures with broadband and mobile phone access, then we can properly transition them to a digital economy. But we have to get them on board first.
Yeah, and I agree. I see it in my state. We have rural communities in my state who are not connected. They cannot connect to the broadband, so they are left out of services from healthcare and education. And now as we move and utilize this technology, 5G, we're going to leave them behind, and we don't want to do that. There are too many that we have to bring along right now, and there's things we can do right now and not study them further. So I appreciate the discussion, and I notice my time is up. I'll submit the rest of my questions for the record. Thank you, Mr. Chairman.
Thank you. We have several other senators who are signed in, but I don't believe they are actually here. I think they're at other hearings. Is there a senator who has not had an opportunity to ask questions who is here on on the digital link? Okay, with that, Senator Brown has asked for another question, and actually I will follow him with another question of my own, and then that will wrap up the questioning. Senator Brown?
Thank you very much, Mr. Chairman. This is Professor Cuttino again. Senator Tester mentioned that many rural communities and people without great access to internet wouldn't necessarily benefit from a central bank digital currency. Professor, would offering access to the banking system through post office and rural banks, like I've proposed, help everyone benefit from a digital currency?
Absolutely. That again goes to the point of bridging the gap between the cash and digital economy, those who don't have access to banks. And everyone has access to a post office. There's one in just about every community, I think, without overstating, I'm pretty sure everyone. But the point there, again, is that we need access points that meet people where they are today. The post office is one, ATMs are one, their local bank branches are one, and then later transition them to the digital market once we build the infrastructure for them. But yes, simply your proposal address their issue.
Thank you. Mr. Giancarlo, do you agree this could help promote access to the benefits of a digital currency?
Well, Senator, I don't propose that a CBDC is a panacea for issues of financial under-inclusion. Those are real issues. They're diverse issues. They affect different communities in different ways. And I don't propose a US CBDC as a full answer to all that. I really view it as core architecture on which we then need to build systems to address that. Professor Christopher Brummer at Georgetown Law School recently wrote a blog on how he thinks that if we get it right, we can bridge both the concerns of those who are primarily focused on financial inclusion and those who are focused on core architecture by using this new architecture on which to add services such as a better system for identity, better systems for financial education, better approaches to credit scoring that we can build on this new architecture. So I propose the architecture not as a full response to financial inclusion, but as a basis to then build smart solutions for that.
Well, thank you. And Mr. Giancarlo, thank you for your thoughtful approach with the Digital Dollar Project. And I think we have some on your proposal and the one that Ms. Cuttino and I and others are interested in. I think we have some common ground. Mr. Chairman, it's been an informative hearing. I'm thankful for that. We have for years on the Banking Housing Committee, Senate Banking Housing Committee, talked about the unbanked. I remember in the years of the Obama administration, we tried to make some progress. We really haven't done it very well in serving the underbanked and the unbanked. And this is a real helpful hearing and I think some significant first steps. So thank you, Mr. Chairman, for your work.
Thank you, Senator Brown. And you are right about that. And we need to move forward and make sure that I think that this new technology and development has the capacity to help us achieve significant progress in that score. But this has already been made clear here that it also poses the problem if it's abused or not handled properly. It can simply continue or even maybe exacerbate the problem of the cost of financial services to those who are of limited income. My last question is for you, Mr. Cascarilla. I believe it was in response to Senator Kennedy's question, but you've indicated that Paxos has a limited purpose trust charter from New York State Department of Financial Services and is subject to bank-like supervision for capital, liquidity, customer protection, cybersecurity, and AML requirements. My understanding is that most stable coins or exchanges are registered with FinCEN as money services businesses and obtain money transmitter licenses from states to achieve the objective that you were talking about having something that works across borders in a federal union like ours. My question is, does MSB registration with FinCEN provide sufficient oversight for stablecoin networks with similar functionality? Or would an even better solution than having them all go to one particular state Department of Financial Services for regulation, and then trying to be sure that there's cross-border recognition of that regulation? Would a better solution be to create a new federal charter of some sort, a new federal system for digital currencies?
I think there's a couple components to break down there. I think, firstly, we're very proud of having our trust company status in the state of New York. And I think that the money MSB MTL regime is not an effective mechanism with which to regulate stablecoin issuers, because ultimately you do not have a primary regulator. And having a primary regulator like we do as a trust company is very important, because there's one person that oversees the issuance, oversees the way we operate, oversees how we deal with customers. And so I think that's very important. And of course, being this trust company is very, very safe, because we don't use customer funds to fund our own business. On the other hand, I think that creating the right type of portability at a state level is very important, because it's very difficult as an innovative small company to go out and get all 50 state managed money transmission licenses. This is really a complex process, and it's very expensive. And there's different regulatory regimes. If there was the right type of portability, like an e-money license in the EU, I think that could be very effective. I think having a fintech charter that the OCC has talked about is another tool in the toolkit. There's different ways to accomplish this, but I think the key point is, how can we make it so that innovation and innovators in one state are able to operate in all states without having to spend an enormous amount of time trying to manage different regulatory regimes?
Thank you. And Mr. Giancarlo or Ms. Cuttino, do either of you wish to respond on that?
I don't think I could say it any better than Mr. Cascarilla did, so I'll defer to my colleague, Ms. Cuttino.
All right, thank you. All right, then, that concludes our testimony today. I again want to thank all of our witnesses. This is a critically important issue. And we, as I said at the outset, we being the United States, need to stay in the global leadership in this arena. And your testimony is very helpful to us. We're going to, I know, be working closely with you and other experts to make sure we get this right and develop the right approaches in the United States. For senators who wish to submit questions for the record, those questions are due on Tuesday, July 7th. And I ask each of our witnesses, if you get additional questions from our senators, if you would respond, please, as quickly as you can. We really do appreciate the information and advice and counsel and expertise that you bring to us on this complex but critically important issue. Again, I want to thank you all for making your time available and your efforts available to work with us on today's hearing. And with that, the hearing is adjourned.
I think.
All right, guys, thanks so much for hanging out. Yeah, it seems like this was just for the record. What's going on, guys? What's going on, family? Hey, I just wanted to just do this live stream for you guys. I appreciate you being here. I hope you enjoyed it. Sorry, I apologize. I actually hit the go live a little bit late, so we missed the introduction from the guy who was overseeing the whole thing. So, guys, thank you so much for hanging out. It's Mrs. Crypto Siege's birthday, so we're gonna head out and go have a couple of days to ourselves without the little Crypto Siege. So she's gonna go hang out with her friends as well. So I hope you guys got some good value from it. I didn't even get a chance to check out most of it, but I guess I will catch it later on today. Yeah, you guys are welcome. Absolutely welcome. Big time. Absolutely big time. Deep Mind. I'm so pumped for you, bro. You know why. But I am so pumped for you, brother. So, all right, guys, listen, thank you so much for hanging out. I'm going to wrap up this live stream and get ready to hit the road for just a couple of days with the love of my life there. All right, guys, thank you so much for hanging. Great to see you all, and we'll see you on the next one. Maybe I'll do a little drive video or something. Talk to you soon, guys. See ya. Bye.